welcome to Market Insight for the week of April 3rd through the 7th, 2024. Starting with our usual top-down approach and the monthly chart. Not much new to say about a monthly. We've been in an overbought position here in the trend channel since March. Started a reaction in April. Get a pen here. So we got overbought up in here actually in February, March, and then we started a reaction last month in April. But all of May has been up, right? So while we're vulnerable to a pullback on the monthly time frame, we're also holding gains as well. So we'll continue to be guided by the lower time frames. Just keep in mind we could start a deeper pullback at any point, a monthly pullback, right? And I've got it highlighted here as to where the monthly might come back to if it does pull back, where we would anticipate it coming back to, somewhere into the 4,800 level, maybe down to 4650 area, 4630 area, somewhere in here, but a big move down. So we're overbought up here in the trend channel. We shouldn't be surprised if and when we start to get a deeper pullback. But that won't happen until we're seeing it on the lower time frame. So let's now turn to the weekly chart. So the weekly started to go down last week, but as we will see on the daily, the market hit significant support at the top of this area here. It hit that level and then started to rally up. We'll see why that occurred in a moment. So just the top of this support was the last week that April had as a reaction. This was the week of April 19th, if I'm not mistaken here. Ended on the 18th, and that was the beginning here up in the early part of the week. That Monday was the beginning of that big supply coming down. So I do know that the downside volume during the early weeks of April were increasing, and the market may need to come back down into this area and test before rallying. But I also know that the last few weeks have been holding near the old all-time highs that were put in last March at 53.33 and a quarter. So in other words, we're not reacting off of resistance at this point. And so thus far, the week is holding its gains. Let's take a quick look at the daily chart. Whoops, got ahead of myself there. The daily is showing obvious bullishness. We came into the demand line support off of the April 19th and May 3rd lows. This is also where that supply entered during that Monday during the week of April 19th. We start to see the supply come into this area. So what this is showing is that the buyers are not letting sellers resume taking the market lower like they did back in mid-April. So instead, we're getting a strong rally back up, closing back up above the lows of May, above the lows of May 23rd. Yeah, this is a big supply day. Sorry, just couldn't see the notes there. So in effect, the composite operator drove price down into the area where it was attractive for sellers to push the price lower, right? But now in that same area, but a month or so later, and there's no interest in pushing price down. Right? So that's what we see on the daily, bullishness there. Now, I want to point out here the value of using the 240-minute chart. So first off, as we approach the lows from last week, we already knew from the daily and the 240-minute charts that we were coming into a key support area, and that the 240-minute would be oversold at that point, and that we could see, and in fact we did see, a nice little robust rally here. And so the market does rally up smartly. And note how the upside ended right in here, where we have a confluence of the horizontal old support, now resistance around 53.05, 53.08, and also the 240-minute supply line coming into that area. So we have confluence right in here. Not a surprise, therefore, that the market would stop rallying at that point. Right? But notice how the 250 highlights those key levels of support and resistance. We can clearly see resistance at levels of 53.05, 53.02 area that we've just been talking about. A little bit higher up, 53.22. Right? That was a big area for several days a couple of weeks ago, where the market traded first as resistance, then as support, and back and forth, back and forth. And then the 53.49 level, the top of the trading range, before getting to new all-time highs, right? And same thing for support to the downside. We have 52.72, and then 52.65, 64 level in here. So it highlights that the 240-minute highlights these very nicely. And we can use this chart all week, right? If price comes down into the 52.72 area, maybe a little lower to 52.65 or so, it could set up a buy opportunity, and we'd be assessing the market at that point. We'd be looking at the conditions and whether or not they were favorable for a long. And if they were, then think about it this way. It would represent a flush underneath this level, then a recovery back to it, the 52.70 level, right? We flush underneath, we recover back up, and then we test it and hold at that level. And that's bullish, right? I'm not saying it's going to happen, but that would be one of the things that we would look for to potentially happen. So then we have resistance here at 53.20, and then resistance at 53.22. We can watch how the 15 and 60-minute time frames act in these key areas, right? If price pushes up on Monday or Tuesday into this area and starts holding in here and holding that support, we know where to look for the trades, right? We know to look for trades here around 52.22, right? After a push up, we might see price come back down and test 53.08 in here, and then rally all the way up. I mean, that's how I view this, right? Using the 250-minute chart from day to day to see how the buying and the selling has shifted, and to see, who remains in control, who's losing control, that sort of thing. The 250-minute chart, as we often talk about, is a very useful time frame. So for next week, as long as we can hold above 52.65, maybe a little bit lower into the pocket here, but we're in pocket support. As long as we can hold that, we can anticipate higher prices. So early in the week, we'd be using the 240 to see if price comes back down to the 52.72 area, and then watching the lower time frames on price and volume for a potential long. The 53.08 level may become important as the week goes on. It'd be certainly a spot where we might take partial profits. But if we can get over this level, then it would be a clear break of the 240-minute supply line. And then we'd want to see good testing on the lower time frames up in here to set up a trade that might take us to the top of the trading range here at 53.49, maybe up even higher to 53.68 or to new all-time highs. So these levels on the 240 are spots where trades may set up, and they also highlight where profits can be taken. And we can follow it day by day and help keep us on the right side of the market and keep us from making poor trades, and especially from over trading, right? We start to see that the swings there are only a couple of swings during the course of the day. We don't need to be flipping back and forth all the time. Taking a quick look at the major markets, all three markets are bullish. The Dow is obviously the weak market here. in a couple of respects, and this is important. First off, the S&Ps and the NASDAQ both made new highs, and excuse me, the Dow did not. And then we're seeing a much larger reaction down on the Dow than we've seen on either the S&Ps or the NASDAQ. So we've got a couple of instances here of weakness on the Dow. We want to watch this carefully over the next week or so. If the other two markets are making new highs, right, if we're back up in here making new highs or retesting the highs and the Dow is still really far away, that's going to be telling us potentially something meaningful. Right? But right now, what we're seeing here is bullishness on the major markets. And that's what we'll be looking for in the course of the next week. So just for the coming week, just as a reminder, Thursday, deep practice, our normal time, normal schedule. That's on Thursday the 6th. Also, Helen's meditation course is starting up this month, and she has 2 classes going on, 2 separate times to kind of meet people's time zones. And so if you were at all interested and didn't sign up, here's your last chance to get into Helen's June meditation classes. And I'll be there too. It should be a lot of fun. You should learn some really good mindfulness skills from Helen. She conducts these during the course of June, 4 sessions during June. Everyone, have a good rest of the weekend. Have a great trading week next week, and we'll see you on the 6th for deep practice. See you then. Take care now. Bye-bye.